Hello friends. Today we are going to continue the explanation of the book, How I Made $2 Million in the Stock Market. So in the previous video we have saw the chapter 1, then now let's begin with the chapter number 2, Entering the Wall Street. When the author came back to New York from Canada, he suddenly started to search for a new broker. Soon he found one with the help of his friend whose name was Lou Keller, and told to Keller about what type of stock he is looking for. After this, author had signed some papers and Keller told him to open an account in their brokerage and fund that soon to start investing. So author has $5,800 left with him. He decided to stake it up to $10,000 and start investing. So as broker's suggestion, he was told to trade in safe stocks which have a good dividend, stock split, etc., but he can't understand the half of the things that the broker told him. Hearing this, invest in 3 stocks as per the suggestion. After this investment he made a huge profit of $1,333 in just few weeks. Author was very happy seeing all this. He was making good profits regularly but didn't realize that he is doing the same thing that he has done during the Canadian period, that was taking tips, but a small difference is that this time he was also getting some information about the company, which is good. His $10,000 had grown to almost $15,000. He sometimes calls his broker 20 times a day and does not feel good until he had done a transaction every day, and whenever a newbie company was issuing its shares he suddenly bought them in a large quantity. After this there were 10 deals in which he didn't make a profit, but the person who was getting rich consistently by all this was the broker, and he had noticed that the broker has earned about $230 during these 10 transactions. Now the problem was that he can't understand what the broker is telling, so he started to read the books related to the stock markets, and he learned much about the market and started to find a company like Brilliant. Whenever he saw an advisory firm advertisement in the newspaper he always bought the subscription of that firm. There was a firm who was talking about a company's share, and while doing its analysis they said that the price of its share is going to be 3 times the original price. Then guess what? Author bought its share in no time, but instead of going up it was going downwards consistently, and by this author has made a loss of up to 50%. After which broker has suggested investing in a well-known aluminum. He invested $6,300 in it and sold them for $7,450 and made a profit of $1,000 after he invested in 2 more companies and made losses and thought investing back in that aluminum company, and in just few minutes he made a loss of $100 and his net loss came to be $460 during this, and realized that if he had invested only in that aluminum company then he would have made a $1,000 of profit instead of a $460 loss. During this the share price of a company jumped about 50 to 100 points. He bought 100 shares of that company and made a profit of $1,200, and there also the losses were repeating, which left him with a net profit of $195, and he soon realized that time also he would have made a $2,600 of profit instead of $195 if he had been in that company. Then he hears of buying at low and selling at high, and thought that when I will know that the share is cheap or expensive, and soon heard about over the market. It is a place where buyers and sellers trade shares of unlisted companies in the stock exchange. And after buying these shares he was struck with them because he was unable to sell these shares. After a long time he found a buyer and sold that shares to him at 40 cents each share, after which he decided to leave this market. Then he bought 200 shares of company and paid $5,000 for them at the average price of $24, and it slipped to $19 in just few weeks, and sold them at the loss of $1,160, after which that share fell to $12. Along this he heard of a company from the broker saying that this company will going to merge many small companies in it, and after which its share price will be 5 times than the current price. Hearing this, author quickly ordered the stocks of that, and he don't even know that this company would lead to a loss of $1,000. After all this the author made some rules that were: 1. He should not follow advisory services and be cautious with brokers' advice, as they are not infallible or can be wrong, either in Canada or on Wall Street. 2. I should ignore Wall Street sayings, no matter how ancient and revered. 3. I should not trade over the counter, only in listed stocks where there is always a buyer when I want to sell. 4. The fundamental approach worked better for me than gambling. I should study it. 5. I should rather hold on to one rising stock for a longer period than juggle with a dozen stocks for a short period at a time. Soon he started to doing his own analysis and arranged them accordingly in different categories for which he had checked companies' quality ratings, experts' view, book value, cash position and dividends and ranked them for their investment. So we came to the end of the video and will continue the story soon for that. Bye bye.